Number 6 of these 7 up here, and then we'll get into my hedge play, is Revolve, RVLV. This one might be a little more of a hidden stock for folks that some people might not know of or be aware of. But in regards to Revolve, they are a very successful e-commerce company in the fashion industry, clothing space, and specifically for millennials, like younger folks in general are huge. That's not their whole customer base, but under 40 is a huge component of their customer base overall. And they own Revolve and they own Forward. Forward caters much more to the very high end, which is a space that's been hit recently. If you look at some of the kind of the Louis Vuitton numbers, if you look at even like the Estee Lauder numbers, which is the highest end makeup company in the world, those numbers have not been too exciting recently. And the same thing's kind of going on with Forward business here recently. Now, why is the stock being killed so bad? Okay, why is the stock gone from $80 to $14, right? The numbers, so net sales, obviously, the company was blasting off net sales, and then now recently net sales have fallen 6%. Gross margins have fallen about, let's call it 200 basis points roughly year over year. Net income fell 55%. The company is still profitable, but much less profitable than they were. Certainly a couple years ago when they blasted from $14 million of net income to $31 million of net income, right? To now be back down to 7 is just a huge disappointment. Adjusted EBITDA fell 61%. So all the numbers in the short term are pretty much bad. The only good number I can pretty much see is active customers up about 14% year over year. Total orders placed is, slightly growing, but considering your active customers has grown 14%, that total orders placed is not an impressive number whatsoever, folks, okay? Now, if we look deeper in the business, the net sales, bad for Revolve, down 4% year over year. Forward, down 15% year over year. Revolve, as far as gross profit, down 7%. Forward, down 23%. The numbers are bad, just bad across the board, okay? And so that's how you get a stock price to go from 80-something dollars to $14 here today, folks. That's how it happens. Now, with that being said, I do not believe the reality of what is going on currently is going to be the long-term reality for Forward or for Revolve overall. Revolve has a phenomenal balance sheet, first and foremost, on this company, which I think the balance sheet gives you a good insight to how good a management team really is, okay? And in terms of Revolve, they built this balance sheet up tremendously over the years, $269 million of cash and cash equivalents now, as far as the latest quarter went, $629 million of total assets. That's versus total liabilities at $223 million. That's over $400 million in total stockholder equity. Very impressive. And if we think about this company over time, it has been an incredible growth company. I mean, these two gentlemen, the two co-CEOs of the company, right, have grown this company from a nothing company just 10 years ago to what it is today, right? The company even in 2017 did $400 million in revenue. This past year, they did $1.1 billion of revenue. I like a management team that not only has a proven business over time and is just going through tough times in the short term, but these gentlemen, I'm going to give them the benefit of the doubt. These guys have done tremendous over time. They've built this business up. I'm going to give them the benefit of the doubt. Not all management teams deserve benefit of the doubt. But for this management team and what they've been able to build over time, I'm going to give them the benefit of the doubt in this situation. And I believe brighter days are in Revolve's future in 2024 and beyond. But it's been a really rough patch here in the short term for the company. And I believe they'll turn things around in 2024. I believe profitability will come around. I believe margins will come around. And I think it'll be up and up from there. But nonetheless, folks, it's always a risk. And it's a risk I'm willing to take in regards to Revolve. The Planet. I pulled up a 5-day on TradingView of the Planet. We're talking about an 89% move. An 89% move in regards to Planet. So there's something absolutely massive going on for the Planet. They announced an acquisition, and I covered that recently. But the thing that's going on for the Planet right now might even be bigger. And this is probably bigger for the industry as well, okay? HHS is basically calling to reschedule Jack Jackson. Okay, and for Forbes, they're talking about this is a huge deal. Here's why. Okay, a top Department of Health and Human Services official just made one of the most consequential federal announcements ever concerning Jack Jackson prohibition. The agency formally recommended Jack Jackson be moved from Schedule 1 of the Controlled Substances Act, a reclassification for these things that have a high potential for abuse in no recognized medical value, to the much less restrictive Schedule 3. Okay, This is a huge step in the right direction if this all happens and goes through and we go from here, okay? Rescheduled would not implicitly open up access to institutional banking and lending in Jack Jackson, something Congress has attempted but failed to do through the Safe Banking Act. The elimination of 280E may well lead to some new source of capital entering the space, particularly new lenders. First, moving Jack Jackson to the less restrictive Schedule 3 is a clear signal to cautious investors that the federal government is easing its stance on the risk for them has lowered, right? Yes, 100%. While this likely won't lead to the addition of large institutions like Bank of America, Wells Fargo, smaller institutions with a bit more allergy season, man. Sneezing out here. While this likely won't lead to the addition of large institutions like Bank of America or Wells Fargo, smaller institutions with a bit more tolerance may well decide the risk is minimal enough to get involved, right? So, this is like big on many different fronts here, okay? More importantly, simply eliminating 280E should stir up new lending in a market where access has been difficult to come by. Most Jack Jackson loans currently come with 20 to 40% cost of capital. Rates considered predatory and usurious in any industry. One of the lender's biggest challenges today is that 280E SAPs, most of the free cash most of the free cash flow out of Jack Jackson businesses that is needed to service a debt, right? So, it's pretty simple. If you're taking out a loan at 20%, 30%, 40% rates, how are you going to be profitable enough to not only pay off all that debt with that insane interest rates, but then actually have something at the end of the day that is so unrealistic, right? It's incredibly unrealistic. So that's what I'm saying. It basically saps most of free cash flow. Eliminating 280E will provide massive cash flow relief, allowing companies to take in debt for new projects and expansion that is not currently available. And with more lenders willing to loan to the Jack Jackson industry, interest rates on those loans will likely fall as well, allowing more companies to take on much needed operating and expansion capital there. Okay. Now, rescheduling could potentially have additional benefits for publicly traded Jack Jackson companies and their shareholders, who have seen those company stocks plunge to 1/10 the value from a couple years ago. Yeah, it's been awful. If you own anything Jack Jackson related, your stocks have either gone to zero or they've probably lost 80 to 90% of their value from where they were 2 years ago. It's been absolutely brutal to go through for every stock basically in this industry. Nearly all U.S. Jack Jackson companies trade on the Canadian Securities Exchange, and trading volume there has slowed to a molasses-like crawl. CSE investors poured capital into these businesses in advance of the two stock plunges, making them wary of redeploying more resources into the same companies. Because you got to understand, you go back to this is like 2017, 2018, the Jack Jackson industry was incredibly hot. Then we had a less hot period, but still a hot period at the end of 2020 into the beginning of 2021. And then it's been a ghost town ever since. It's been absolutely brutal, right? And so, for somebody like the planet, I think there's a few important things to remember, okay? One is this is steps in the right direction. These are the sorts of steps you need if we're going to ever have federal legalization, which I hope we eventually have federal legalization in this country, right? The way I look at this very simply, my personal stance on this, I don't look at Jack Jackson as any worse than drinking, okay? In my opinion, they're kind of like equivalents. And to be quite frank, I have 3 kids. If I found out my kids were doing something at a high school party, let's say, and I would hope it wouldn't be either, but if I had to choose, if I'd rather have them drinking at a party or let's call it engaging with Jack Jackson, if I had to pick, I'd rather have them engaging in Jack Jackson than drinking, believe it or not. And so federal legalization, it's eventually coming. We all know it. It's inevitable. It's just a question of when. But a step like this is a step in the right direction. And that's massive. That's huge, okay? For this entire industry, for these stocks, for a company like Planet, right? Which is the Planet setting up to become a giant in this industry. Now, the next thing important to remember in regards to Planet is even after this epic move, right? I showed you it's like a 90% move. Cool, in 5 days. That's massive. It's a blip on the radar. It's a blip on the radar for Planet. Don't even talk to me until the stock's $4 or $5 again, okay? This is all just, look at this. This is our 90% move. We're there, okay? So, when you take into account where the stock's been, it's insane how no one wanted to own these stocks for the longest time, right? And a lot of people got bit on these stocks in 2017, 2018, and then they got bit again at the end of 2020. So a lot of people are just like, and that's how stocks like Planet went to 50 cents. And it's crazy because this industry's there. Like, the amount of customer base is there. It's just about moving it from illegal to a legal market, right? And to get all this done, you need the government's help. And so the government's been moving at a snail's pace. They need to move a lot faster. Bottom line in regards to that. It's like, do you want this market to expand and have a great chance of success? We'll move this industry from illegal to a legal industry, okay? Hey, and guess what, government? You'll actually be able to collect some tax money on that. Instead of throwing people in jail, you'll actually be able to make some money off them, because then instead of illegal product, it's a legal product, and you can actually tax it. Oh, isn't that so smart? Oh my gosh, wow, we actually used our brains for once. Holy smokes, man. Government. But anyways, the bottom line is steps in the right direction. That's why the Planet stock's absolutely moving in an epic way. Third stock up here that's booming and is red hot right now is Zoom stock. Stock's climbed 12% just in the past 5 trading days. And here's the thing that's going on with Zoom, okay? Everybody's really excited. Zoom's making another big move today specifically because basically they're bringing to this feature that's going to allow AI in your meetings, okay? So what this is going to do is it's going to be able to take notes for you. It's going to be able to recap conversations. If you have to miss a meeting at your workplace or something like that, it can obviously record the call. It can summarize the call, everything like that. And it's going to be added to, all customers are going to get access to this, I guess, without an added fee. Now, you might say, well, without an added fee, why are people excited about this? Like, if it's not going to make any extra money. The bottom line is you just want to make Zoom a stickier product overall, right? Especially if you're competing against Teams, Microsoft Teams. So it looks good. Zoom's kind of getting in on the AI excitement here. And I think it's a helpful thing. I mean, if I worked for a company, I think this would be very, very helpful to recap conversations. I wonder if it's something similar to Loom. Loom has a very interesting AI, which Loom I use pretty much on a daily basis. And Loom will be able to basically recap everything you talked about in a video, put timestamp it in everything, and it does that within 2 to 3 seconds. It'll be able to title your video on what's the most relevant thing to what you're talking about in that conversation. It's incredible. Incredible. It's able to do a full summary of what you talked about. Insanity. Absolutely insanity. And so I'm assuming Zoom has something similar to Loom. Maybe it's even a step above that. And it should be a very beneficial thing if you're somebody that uses Zoom for your company overall, right? Now, the other thing I'll say about Zoom stock, right? And I know this has always been a big Cathie Wood stock, and I know obviously the stock price has gotten absolutely smashed since pretty much end of 2020, beginning of 2021. I'll say I wouldn't be surprised if Zoom's a moneymaker over the next few years. Is it a stock I own? No. Is it a stock I really care to own? Probably not. But at the end of the day, if the stock trades cheap, I mean, it's at less than a 20 forward PE. And for a company like this, that's certainly not the highest number in the world. Okay, that's definitely a very doable number to kind of wrap your head around and own a company like this with the balance sheet it has and with kind of the stickier business model that they have overall. Okay,